Hello, everyone, and welcome to your Daily 5. Today is August 23rd, 2023. I'm Leslie Jouflas of Trading Live Online, and I teach traders trading, and I use these specific types of patterns with classical technical analysis. Today, we're going to be focusing on the S&P 500. I'll show you a few of these patterns as we go along. But I want to focus on several time frames today. So we're going to start with the weekly chart, and we're going to work our way down to a smaller chart. Okay, so we're taking a look here at the S&P 500. This is a futures chart, a continuous contract. And we're on the weekly time frame right now. So I thought what I would start out with and show you is, first of all, here's the highs back from 2021, early 2022. Here's the decline the market had, finding support at the 50% retracement from the March 2020 lows up to these highs. Since it made these lows, this is called a butterfly buy pattern, and that's where the market turned up from. And it's been in an upward mode since then, with some periods of sideways ranging. So we want to be able to take a look at where the market might come down to on this correction. So first of all, let's start with a couple of basics. I'm going to put in a retracement level from that high down to the March 2020 lows. From there, we can see that the market traded almost to this 0.886 retracement. So if you're using a Fibonacci ladder for your retracements, you might want to add this one in. I always have the 382, a 0.50, 618, 786, and the 886 on my ladder. And I include this one. This is what I call the last chance fib ratio. And oftentimes when traders don't have this on their chart or they're not aware of it, they assume that if the price exceeds the 786, then it's going to continue either up or down, depending on the direction of the retracement. But the 886 is, again, what I call the last chance fib retracement, oftentimes catches the price as the resistance area, and the market will turn from there. Generally, when it comes back up through it, so if we were to see the price reverse, come back up and start closing above this level, that would be a bullish signal, and it's very likely that the market would retest that 1.0 from the 2021 highs, and if it exceeds that, most likely continue up towards this 127. That would be an extension from this X down to this point. We take the length of that, multiply it by 1.27, add it to the low, and that's how we're getting that ratio, which would be just above 5,100, 5,163. So the market has some work to do in order for that to happen. So right now, after these rallies, and especially the breakout above that 4,200 level, the market now has a sell pattern and has been turning to the downside from this sell pattern. So looking at this on the weekly chart, you can see that up around these highs, there were some divergences on the MACD, and the MACD now has come below the zero line. I think we still might have a bit more downside, so we're going to take a look now. We're going to scale down to a daily time frame where we can see some more detail. Okay, now we're looking at the S&P 500. Again, this is still the futures contract. You can look at the SPY if you like, but we get all of the price swings using the futures contract, where we can see everything that happened even in the Globex markets. So we can't always see all of that detail using the SPY. But back here, this is back in 2022. So that's a butterfly sell pattern that occurred up at those highs. The market started its decline, tested this level again. It was back in February 2 times in February, it came up and tested that level. And then in March of 2022, it tested that level. So notice this line that's extended across here. That's right where that resistance zone that I have marked in there, that's about the high of that resistance zone. And that also coincides with that 0.886 retracement that I just told you. So as the market was climbing up, and for those of you that watch my videos, those of you that watch my weekly market setups videos, you know that this ABCD sell pattern had been on the chart for, several weeks as the pattern completed. Now, with these patterns, we have an A, a B, a C, and D, and this is where these two legs are equal in length. But sometimes we get extensions of this C to D leg. And in this particular case, it did extend not only to this extension, which is a 1.27 extension, but extended up to the 1.618. So that means that if we take the length of this leg, we multiply it by 1.618, add that to the bottom, that's what's giving us that ratio. So knowing that we had some confluence of different ratios and patterns coming together in that same area is not surprising that this is where we're seeing the turn from the market to the downside, doing a correction. And then up in this area here, this formed a smaller ABCD kind of butterfly cell pattern there. Now I've got marked in, this was an area here of some potential support, and as we know in technical analysis, things are fluid. We don't always see things get support where we might be expecting them. But the important thing is to monitor the price. So in this particular case, we can see that it came down to that support area and got just a very shallow bounce to the upside. So that in itself is one way to monitor price. So it says the price is not very strong because it didn't come back up and get even close to these highs again. It was weak enough that it could only do this kind of retracement, and then it comes down through that support, breaks that support area. So this is now going to be a resistance area to watch. And also here, so we can make a zone of just right around the 4,500 level, up to just above it, 4,520-ish, and even up here, 4,550-ish here. So we can follow this price movement down. You can see here coming across these highs, right over here to these lows. We have some resistance and support. And the center line is coming into play today. So the market had the decline, found some support here, and then today is been coming up and retesting that 44.30 level. So we're going to scale down to another time frame, and we're going to take a closer look at what that looked like on that test up. Before we get to a smaller time frame, I want to point out this breakout area of the 4,200 level. The market had spent a lot of time all the way back to September a year ago. Even before that, we can see that 4,200 level in a lot of congestion areas on the chart. So it spent quite a bit of time trying to get through it. And then finally, in May, early June, it was able to get above 4,200 until it hit the resistance here, about 400 points. So it was a nice rally from that low to high. So this is going to be a very important support level for the market to hold, the 4,200 level on the S&P. So I want to do a retracement here from low to high and see what we can find that comes around that area. So the low from here, from October, and all the way up to the high that we just saw in late July, the 382 retracement is coming in right around the 4,200 level. So I would expect some support. Expect doesn't guarantee support, but my expectation is that we see some support in this area and possibly a nice rally off of it. Now, that doesn't mean that we're going to come up and exceed those highs yet. We really have to see what the overall market conditions look like if the price is able to get down this far. If it holds a support, they may offer it as a very good buying opportunity. So I will be watching that area. Okay, let's scale down now to another time frame. Okay, so now I'm looking at an intraday chart of the S&P 500 futures. So this is showing us all of the swings, the Globex session, everything. So we can see how price really reacted on the upswings and the downswings, where support and resistance is, and those important tests. I had marked in this head and shoulder pattern that we can see on the 20,000 tick. This is why I like to use a combination of time frames and different types of charts. I don't believe on the regular session chart, maybe about a 60-minute, we could see this head and shoulder pattern. So this head and shoulder pattern gave us this area of support to monitor, and it broke to the downside. This was the measured move, which price ended up getting there. But on the way down, the patterns have been mostly bearish patterns that have been forming. These are the ABCD patterns. I'll draw a few in for you so you can see. There's one there. Then declines. This is just a retracement pattern up, retracement pattern up. The next one is another ABCD. Notice how that gets up to the 1618 and then declines from there. It's also retesting into this price level, and it declines again, and it forms another kind of A, B, C, D up, and then trends to the downside. Well, this last week on my on the weekly market setups video, which you can find on, if you like, on my YouTube channel. If you look for Trading Live Online on YouTube, you'll find it. I posted, and I said that this week I'll be looking for, early in the week, a rally up and then a shorting opportunity. So we've seen the rally, and we formed another ABCD sell pattern that completed just into Globex, and then also right off the open, it traded right up to that 44.30 area, and it's been declining since. So it's going to be important now to watch this low of 43.50. So now that we have sort of a view of weekly, a daily, an intraday, what's going on with the patterns, I want to go to a monthly chart. But before I do that, I want to show you something that's called harmonic swings. And if you look at the size of these moves to the upside, I'm just taking one line, and I'm just going to clone that line, so it's exactly the same line. And you can see that the retracements up have been almost exactly the same length. Now this one is a little bit higher. This one went a little bit further, and that tends to happen in moves like this. But if we just look at this, we can see that that one, not sure I drew that quite right, extended up to almost the 1618. So if this starts to get above this high now, then that would be breaking this pattern. We'll probably see a stronger rally up, maybe back up to around the 4,500 level, but I still think that is going to be a resistance area. Okay, now we're going to look at a monthly chart. So we've looked at all those other time frames. So let's just step way back and take a look at the monthly chart and see what we can get from this. So notice how quiet everything gets. The farther out you go, the quieter the price action is. You just don't see as many swings on it, but you can point it out and find some important support resistance levels. So this is equivalent to the 4,200 level on the S&P 500 futures chart. And we can see the 382 retracement there. So that would, again, would be coming into a support level, and the expectation would be a bounce to the upside. But again, I don't think the market's going to be ready to go through this high yet, but the price can do anything it wants, so we'll just monitor it. Now, if it comes down further, then the 0.50 level is going to be the next level to keep an eye on. And if we look back around the 0.50, we see a lot of opens and closes right in that level, that the market, while it was in that range for several months, it would close here and then open and then close and then open, another close in that area, and then the open here. And that's where the market finally started to move up and away from the 4,200 level. So either of these levels, 382 or 0.50, I think are going to be strong support areas. And we haven't closed yet for this month on the SPY. So this bar is we don't know where it's going to close yet. So if the market pushes up, then we're going to see a different looking bar. If the market moves down, then that's going to change what we see now. So make sure that you check back at the end of the month after this month closes and see what the SPY monthly bar looks like. If we close with a bearish type of pattern, so far this is looking like a bearish engulfing, but again, we don't know for sure. I'll take this off so we can see the previous bar. We don't know for sure because we're not closed, then that would be bearish. But keep in mind that candlesticks do not give us any type of price targets. All it's doing is telling us, oh, that's bearish, but it's not going to tell us how far that bearish move may go. It may go down to here and turn back up. So we have to use other technical tools to help us identify, which I hope I have brought to you today. So I will talk to you on the next Your Daily 5, and please feel free to make comments. I try and check and answer any questions that I see in there, and I sure appreciate you watching, and I'll see you again soon.